But let's take this conversation forward. Let's get in Shailendra Kumar, who's Director, Narnolia Financial Advisors. Shailendra, good afternoon to you. Happy Friday as well. Well, it seems to be quite a buzzing day in the markets. How are you looking at the kind of activity that we're seeing, as well as any opportunity for fresh positions?
Yeah, Fatima. See, the 1200-point rally in Nifty starting from 10,600 to 11,750 and so has first time got a good kind of a resistance in the market close to the previous peak level of Nifty. Less than the price, the kind of resistance that we have seen 2 days back is primarily on account of some uncertainty on the kind of monsoon we are going to have here. Also in the RBI policy yesterday, RBI governor looked very, that was a key risk in their mind. So that is the kind of, the key observation somebody has to have in the market is how the monsoon will play out from here on. The second, the data, some kind of incoherency is happening. The high frequency data like auto sales is telling you that the consumption is slowing down, but the consumer sentiment index is all-time high as has been reported. So a kind of a disconnect. Now, what will play out in the next 6 to 9 months? How the consumption space, will it be a big drag on the market? Will it create some kind of a resistance to the market rally right now, or the corporate lender and the infra side will keep making the market to a newer high? So that's the key. Somebody has to watch in the market at the moment.
Of course, and we'll break it down a little further as we move along this afternoon on Markets Midday. But let's talk about the RBI. That Feb 12 circular has been struck down, as we all know, by the Supreme Court. A new one now is getting prepared, so we hear. And of course, there has been buzz around this. So what can it likely include? Nivrita, my colleague, tracks the banking sector for us very closely, and she's joining us. So what are the expected changes in what would be the revised guidelines for NPA resolution? Of course, so many industries, whether you look at the sugar pack, the infra pack, and indeed the power industry, would be looking at any developments on this front very closely. So, Nivrita, what have you picked up so far?
Well, that Supreme Court verdict has really left a massive void. Bankers aren't sure really what to follow now that the Feb 12 circular no longer holds. But we have been speaking to a number of, industry experts and in fact many bankers. But now we have a clearer sense really. We had the governor yesterday saying that they will be issuing a revised circular to replace the Feb 12 circular. And what we're picking up from sources is that we can expect that revised circular to come in the next few days itself. So it could be today, could be even Monday or earlier in the next week. So that's one bit of good news to look forward to. Along with that, some details in terms of what will actually be in this revised circular. Most bankers expect that we'll see the main contours of the Feb 12 circular retained in the revised one. But the big difference will, of course, be that the compulsory referral to the NCLT will no longer stand, and that's on account of the Supreme Court saying that that was the Reserve Bank of India overreaching beyond its legal authority. Along with that, what we're also learning is that there are a fair number of recommendations made by banks to the Reserve Bank of India in terms of tweaks that they had recommended to the existing Feb 12 circular. What they are hoping is that the RBI will now use this opportunity to take on board many of those recommendations. So in terms of defining the term stress more clearly, they wanted the triggering of insolvency or resolution plans only after a case actually reached the SMA2 book, which is essentially when the repayment was due for between 61 to 90 days rather than on the first day of default. Things like that is what they're hoping will be included in that revised circular. But very crucially, the big question mark in terms of those restructuring tools that have been subsumed by the Feb 12 circular, whether or not we'll see SDR, CDR and S4A actually come back in the meantime. What we're learning at the moment is that those pre-IBC tools will no longer hold true, and in fact they're unlikely to make a comeback essentially in the revised circular. Largely it will be along the lines of the Feb 12 circular, but we will see the compulsory referral will remain out of the ambit of this revised circular.
Nivrita, thanks for really taking us through the important details when it comes to the latest developments on this big piece of news really that's come in. Thank you for that. Let's in fact look at some impact, because you're looking at the way housing finance companies have seen some uptick in trade today, especially on the back of the RBI move to set up the committee to take stock of the sector. Take a look at Indiabulls Housing Finance. That is very much leading the charts at the moment. Once again, in fact, we're also taking a very close look at a Repco home that has bounced back after that 6% drop that we had witnessed earlier. So pulling them all up for you right there. And of course, we also have more news, because we've also seen Yashpal Gupta, who's the managing director and CEO at Repco Home Finance, saying that liquidity is not an issue for the company. However, the cost of funding is. Listen in to exactly what he had to say.
Hopefully, after this RBI cut, again by 25 bps and RBI nudge to the banks to pass on the benefits, we expect that our cost of funds will go down and that we will be able to pass on the benefit to our borrowers. Q4 will be slightly higher than Q3, but towards the last part of the March month, we have seen some reduction, and then hopefully with this further reduction, the cost of funds will go down. That will be reflected only in Q1 of the current year. For example, the commercial papers which were available to us at more than 8.25% in the month of February, now we are able to raise them at around 7.85%.
Okay, interesting a statement that's also really coming out in that, which is, of course, the whole issue of liquidity versus cost of funding there. Shailendra, coming to you on this entire matter, and of course, earlier my colleague Nivrita was really giving us a sense as to how things stand and the fact that we're looking at a sort of new framework that's going to be executed. How are you looking at the sort of sectors that one could possibly see seeing an upside going forward?
Coming to the circular on the RBI, 12th February, one thing is very clear. After the SMA framework, getting fully implemented across India, the chances of, severe stress coming back or a fresh NPA building up in a big manner is not there the case. And those power infra cases which is already there is already known. So whether you have classified it as a NPA or not, as a market participant, I know how much of extra stress is possible if those companies become NPA. So naturally, as an equity investor, I for sure do not see any risk of unknown happening in the NPA side of the corporate lender book. So that space, whatever happens, surely RBI will come with a circular. I'm pretty sure this will play out simply because additional stress is not coming. So whatever cases we are talking right now, the NPAs happened 2 years back, 3 years back. They are not incrementally happening today in a delta sense. So the idea is that space is a very good space for investor right now. The visibility is very high. All these lenders are sitting on a very high provisioning level right now in their books. Difference between the reported GNP and the stress has narrowed considerably. So that space looks very positive. Housing finance, incrementally every news which came in the last 1 month has been quite positive. Many management has come on board, like say Repco was just talking to you right now. Surely things has improved, but it's still. And October, November sales particularly, the institutional ownership has reduced in the housing finance segment. So that is coming back. That is creating the stock prices, rallying sharper in last few days. For a normal investor, I think they should wait for some correction because liquidity is not still very benign. It will take some time. So you will get another good opportunity to buy in those stocks and still look for those where the parent is very high, something like a Canada Finance Home.
All right, fair enough. So that's an analysis of how we are seeing the impact of the Feb 12 circular play out. And indeed, as an aside, within the financial universe, you're seeing how housing finance stocks today are on fire. The Nifty Bank Index, like I've been pointing out, has been a little subdued compared to recent moves, but nonetheless, we're still in the green. Let's talk about the other sector that has been rallying in trade today, which is the Realty Pack. And Realty Pack is not a case of a day or two. We've seen the Realty Pack move up quite strongly. Year to date, it's made around a 20% rise. And today as well, it's among the top sectoral gainers. Even a month to date rise, if you notice, it's 3 percentage points. And today about a 2 percentage point increase within that index. Which are the stocks within the space that are doing well. There is Godrej Properties, which is the top gainer on the index, surging because the company has entered into this new deal to develop a property in Mumbai's Bandra area, and stocks like Shobha and Oberoi Realty and several others. They're leading the index right now. In fact, if I look at the BSE Realty Index, there is, except Omax and Prestige, in fact, Omax is also in the green right now, but only a Prestige is down in the red. But other than that, all the constituents are doing very well for themselves, led, of course, by Godrej Properties, but India Bulls, Mahindra Lifespace, Phoenix Mills, they're all up and about. So whether this trajectory is going to continue or not is my question to Shailendra. What do you think about the current valuations within the Realty Index? Those books are still very leveraged. Would you still ignore ground realities and bet on the growth of the affordable housing sector, Shailendra? Or would you still wait and watch and perhaps buy into some of the inputting sectors like cement and ceramics?
Sure. Vikram, see, for long I am having a very positive attitude or approach on the real estate sector. after RERA, a lot of negativity about the company, opaqueness in the balance sheet, execution kind of hangover has gone out of the system. So these companies are in a much better shape. Those where the balance sheet is lighter and the basically the valuation is factoring the operating earning of the company and not the land bank kind of a thing. Those stocks are to go for. Surely valuation recently has run up a little higher than where I would have been more comfortable buying it. That leaves you an opportunity to buy into those sectors which will drive on the reality, up cycle. So housing finance company where the low ticket size is getting sold more. So as I name Canada Finance Home. Cement surely, because I think the second half of this calendar year, after the corporate lender rally, creates some kind of a boost for the Nifty base as such. The second half would be more about the infra, and the cement will surely be a good name to buy. Valuation in cement is not very high. For a couple of names, EBITDA per ton appears improving because the input cost is reduced. So another way to look for this real estate rally will be to look for opportunity in cement space. Maybe some in ply, some in tiles also would be a good idea to right now, look for.
Okay, let's take a look away from that at what's happening when it comes to the pharma pack. I want to just focus a little bit on a Cipla because that is the top gainer on the Nifty today, looking at gains of over 2%. Now, this is coming on the back of certain news. Basically, the company has, of course, received an EIR from the US FDA for the Goa plant. The clearance is good enough for Cipla as the Goa unit contributes rather a lot to that US business. So that, of course, is a bit of stock-related news that we're getting in. But Shailendra, any sort of strategy when it comes to this particular sector? Any kind of factors you think investors should be looking at, and the size of companies they should be looking at when it comes to investing in the sector?
See, pharma, I think, is for an investor right now. Also, I think pharma is not the easiest space to take to make your stock picking. Because there are so many headwinds in terms of US regulation. You get some positive news someday and someday you get some negative news. I think on the margin side only, the positivity is most of the company last quarter reported a stable or a little bit of improvement in the margin. If this quarter also the company reports improved margin, all the big names, Cipla and Sun Pharma and Dr. Reddy kind of the stocks. If the margin improves here and you have this Q4 number, you see where the working capital is reduced, because these were the two key stress apart from the US FDA news. So wherever the margin has improved this quarter in the results and the working capital appears reduced, those are the pocket to will go for. In terms of theme, I like more those companies which are domestically focused and have good amount of generic launches in India itself. So domestic focused player, I think are in better space right now for a stock picker. In broader number, look for where the margin is stable, the working capital is reducing.
Fair enough. That point that you make about the domestic focused pharma companies, that point is well taken, because some of the action that we are seeing on the US FDA front, we are clearly not out of the woods, and we see ever so often stocks reacting on the negative side on some of these action on the US FDA front. And there is, of course, that pricing element that one needs to keep into account as far as what is commanded within these markets and chiefly the US market for the pharma companies. Let's also talk about Jyothy Labs. The stock has seen an uptake of just around 5 percentage points in trade today. Right now, more than that, about 5 1/4. So we are up close to the day's highs. Macquarie, for one, is seeing more upsides. A new report has come out. They've initiated an outperform rating on the stock, and let's find out why from my colleague Vandita. She's here with the details of that report. Vandita, what are you gleaning from what has been put out by Macquarie on Jyothy Laboratories?
Well, right. Macquarie has initiated an outperform rating on Jyothy Labs with a target at 250 rupees per share. That implies 37% potential upside from the current market price. The research firm likes the company's diverse product portfolio with a presence in mainstay categories like dishwashing, where low penetration provides a long growth runway. Fabric care, the tailwind from premiumization in detergents. Personal care, where they have a strong play on naturals proposition. The good thing is that they are channeling their energy on volume growth, which is a big positive according to Macquarie. They also believe that Jyothy Labs' differentiated product positioning, new product launches and investment in key brands, that is leading to companies' market share gain. The investment firm builds in 21% profit after growth CAGR and 220 bips increase in return on equity in the next 2 years, and are at 9 to 11% ahead of consensus earnings for the next 2 years. Talking about valuations, Macquarie said that mid-cap FMCG valuations discount to narrow on earnings delivery. Macquarie values Jyothy Labs at 30 times financial year 21 earnings. That is in line with last 5 years average multiple. Macquarie expects improvement in return ratios driven by improved margin delivery, deleveraging of balance sheet, and overall, if we see, Macquarie is bullish on Jyothy Labs.
All right, so that's the coverage that they've initiated. This is the report that Vandita is telling us about from Macquarie about Jyothy Labs within the FMCG space. Shailendra, I want to get your understanding. Here's a company that is big on fabric care. They do household insecticides, they do personal care, fragrances. So keeping in mind the scope of their business and looking at the kind of pressures, especially building up on the consumption side, which some experts have been pointing towards. Some see this as an opportunity, some see this as headwinds. Where do you stand on the debate as far as the outlook on FMCG players like Jyothy Labs are concerned?
See, for players like Jyothy Lab, the thesis is basically, the kind of valuation premium the larger player in the FMCG is having over the mid of the pack. And that thesis may be hinting about a valuation kind of re-rating. We also have a positive view on Jyothy Lab on record. See, the idea is simple. The volume growth is not coming out for FMCG player, neither from urban market nor from rural market. The only thing which is working in their favor is basically the case of premiumization, which is happening for many of the mid as well as the large FMCG story. Now, whether this premiumization will be so it has happened for last 6-7 quarters, whether it will be keep happening for next, say, 2 years, 3 years, so that the investment case for FMCG remains there or not. And that's a big if in my mind, because the valuation for most of the FMCG names right now, the kind of volume growth analysts are talking about and the valuation which is there, I think there is a disconnect for sure. The only thing which is helping FMCG maintain this high valuation is the case of premiumization. So that is one variable one should look on a continuous basis. If you find that thesis is not getting, practically in result, those numbers are not getting reflected, then surely the valuation will be derated for FMCG going forward.
Let's bring up for our viewers Rajshri as well as Mavana and also Sri Renuka sugars that have seen quite a jump, and that's at about 10% each. Following those are Uttam sugars. Also want to pull those up for you as well. And we are also looking at Simbhauli sugars as well and Bajaj Hindustan. Pulling all those counters up for you. Now the gains are seen on a report that's been put out really by Edelweiss that says that in anticipation of low production, sugar prices are expected to move up in the year 2020. Now, the report also does state that ethanol blending is going to help reduce the demand-supply imbalance that we're seeing in the industry, and also companies across the sector have investments worth about 6,000 crores that are lined up to expand in that direction. Shailendra, sugar has never been a sort of sweet sector. Given the kind of policy as well as the kind of irregularities that really exist when it comes to just getting that supply and demand equation going. But given the kind of, I guess, optimism that exists in what we're seeing at the moment and the prices that we're at, is it worth a play?
Fatima, see, right now sugar is really in a sweet spot. So it was not sweet, but it's now a sweet spot, I would say. The basic, the unit economics of a sugar plant has become positive over the last 2 years after the various committee recommendations and government following those rules. The working capital cycle has reduced in many of the cases. Also, ethanol blending is going to help them in a structural manner for very long term. Also, this is one sector which has not seen the true reform happening by the government. So maybe, that's hope always gets built. There will be some kind of a bigger kind of government intervention in terms of getting this, decluttering this sector. A thesis always there in the mind. Right now, unit economics favors these companies, so they will remain good. The only issue as an investor, if you're buying a stock, is in the past, the promoter of this company has done so much of a damage to their balance sheet. So whenever the good time comes, they go on in a very bad kind of a capital allocation strategy. So that's one watchful. So look for only those companies where the management has shown over a period of time, say 10 years, that they don't go and play with their balance sheet too much. So you have to be very very clear about what stock you're going to buy. But otherwise, sector is in a sweet spot right now, to my mind.
All right, the sector is, of course, in a sweeter spot than it has been for a while. Shailendra Kumar, such a pleasure speaking to you. That's the director at Narnolia Financial Advisors, giving us a good sense as to what we should be looking at when we're seeing this news flow in the markets. Still ahead on this show.